Is the stock market going to sell off further? Will it crash? Is it just a correction? Let's take a look at the charts and see if we can find some clues as to what may happen next and what we can do about it. Ahoy there, trader. It's Phil Newton and welcome back. So we'll take a look at the S&P 500 futures. I prefer to swing trade off the daily charts. And as we start the week, we can see that the futures are starting to sell off just a little bit, continuing the movements that we saw at the end of last week. Now, at the moment, based off the daily chart, I still think that this is a retracement in the context of an uptrend, and we're just holding on to this 200 period moving average, which is an automated frame of reference that I use to decide whether I should be bullish or bearish. We've got a lot of data to support this type of buyable dip, and I can just flip on my backtesting report, which looks back over the last 20 years. I've explained the rules on separate videos, so I won't belabor that here right now, but essentially what we're looking at is a positive expectancy strategy. We've got a lovely steady equity curve, looking for buyable dips in the way that I teach all my traders. Now, these market retracements or sell-offs, they can be a little bit daunting for the faint-hearted, or if it's the first time that you've been through these types of market cycles. And markets cycle, they ebb and flow back and forth all the time. So should I be scared of a sell-off? Is it going to turn into a crash? Is it just a continuation of this correction? Is it a retest of this recent low? And this is really what I'm looking for. This is where the major correction at the end of January sold off, and I'm essentially keeping an eye on this, so I'm not necessarily worried until around about 4,200 is being breached. And the way that most markets ebb and flow is we will see some sort of retest of the low. It doesn't have to come to the absolute low, but this for the moment is still just retest. This is where, if we think about the structure, that price has sold off, and we can see that price quite literally stopped here at this previous 4,300, 4,200 zone. We can see then elevation in volume that says something was going on at this level. So I've got to presume that this is going to be a nice structural low. So this just makes me think that for the moment it's just a retracement in the context of a very long, very well established trend, and this is the market low for the moment. So one of the ways that I'd like to combat, is there a correction? Is there a retracement? Will it crash? Rather than worry about what the market's doing, I'm focused on having a portfolio. So over on the left here in my watch list, these open positions, and I've got a number of bullish directional trades and a number of bearish directional trades. The way that the markets work is that when the market swings up and has its trending move, then what should happen is that these bullish trades should start to perform or even outperform the market. And similarly, when the market sells off or swings down as it has done, then this is where the bearish side of the portfolio should really accelerate. This allows me to not really worry a great deal about what's happening on a day-by-day basis, whether it's rallying, retracing, correcting, crashing. I should be making on balance some profit somewhere as per the strategy. And this for me is what it means to have a balanced portfolio. A number of positions that benefit from an upward swing in the markets and a downswing in the markets. This essentially allows me to outperform the markets and, more importantly, to not worry about what's going on a day-by-day basis. Remember to subscribe to the channel so that you can keep up to date with the latest short videos of the individual trades, the stocks, and the overall market performance that I'm evaluating. With that said, I will see you on the next installment. Bye for now.